Well, the screen says we're live. Hey, Taylor,
Hi.
how are you?
Hi, I'm good. How are you?
So this is the awkward 30-second opening before a few people join us live before we actually start the show. So, how was your weekend?
I mean, Brian, I don't really think you're awkward. I think you're a nice guy. I don't know. I don't understand all these people who say those things about you.
It's it's coming out in my counseling, so it's all good. All good. Happy Monday, dude.
Happy Monday. Yeah, look, it was pouring rain where I live for Saturday. I had
Yeah,
rivers running down my front yard. And then Sunday started to open up and get nice, and it's nice out now. So happy Monday.
cool. So give me 1 second here. I just want to see that we show up on LinkedIn. It's always a good thing since we're doing a LinkedIn Live. There we are. I see us over here. Okay, cool. We are here. We are live. Good morning, Taylor. Thanks for joining me.
Yeah.
So this is, I guess, episode 2 of a 3-week live series I'm doing on everything credit triggers, right? And I know people are probably getting tired of hearing about it, but there's a couple timely events that I thought would make sense for us to do these sessions. And I know last week, Taylor, you attended the National Advocacy Conference hosted by the Mortgage Bankers Association, of course, in DC.
Yep.
I want to get your perspective on that in a moment. But before I do that, I want to introduce you to the audience that doesn't know you.
Hi, audience.
If you don't know Taylor, you need to follow Taylor. Taylor is the Chief Operating Officer at Developers Mortgage and also is the current president of the Community Home Lenders of America. Did I say that right?
You did. It's definitely
CHLA?
America. It's definitely America.
America. I know. I almost wanted to say association there. I get kind of.
We changed it a couple of years ago. Yeah.
So this series that I'm doing, last week I had Ethan Saxon from the Mortgage Bankers Association. He's one of their lobbyists, and that was on the heels of NAC, National Advocacy Conference starting. So last Monday, he was kind enough to kind of give us a preview of what the conference was going to be about. Today, I want to get the perspective of CHLA. I want to get the perspective of Taylor, the mortgage banker. And then next week, just to kind of wrap up this 3-week series, we're going to have the team from the Brokers Action Coalition. So we have 3 kind of different coverage points, if you will, on this topic, which is clearly an important topic. It's, I think the 2 leading hot topics in an industry is credit triggers and the NAR, settlement news that just keeps on coming. And we might even leak into that a little bit today. But Taylor, let's start with your recap of the National Advocacy Conference last week. What did you learn? What's the buzz on the Hill?
Yeah, I'm first and foremost, let me say a couple things. Thank you for having me. I'm thrilled to be here. You and I are both certified mortgage bankers. You and I both try to spend time to really understand this industry kind of from the inside out. And I appreciate that about you greatly. And you and I have both actually originated loans. You came out of, for those of you that don't know Brian came out of the origination side, and he pretends to be a fintech guy. He's an originator like the rest of us. And I am very proud of that background. Look, my NMLS is active. I'm licensed in a bunch of states. I take loan applications. I help borrowers. If I don't close loans, I don't make money. Mortgages pay for my mortgage. And so, to be honest with you, like, I'm not a professional lobbyist. I'm not an ex-staffer on Capitol Hill. I don't get paid 24 hours a day, 7 days a week to think about this stuff. I just put people in homes. And our organization is built on a very democratic process. It's very, very grassroots. It's all about taking kind of the advocacy things that we all talk about and then turning them into action and doing something about them. So we're very active. And I'll talk about that in a second, but this trigger leads thing, it is not new. I mean, first of all, we started attacking this well over a year ago. Our first formal letter to Director Chopra was back in November of 2022, and we were working on this even before that. we were kind of surprised the rest of the industry took as long as it did to kind of catch up and get involved. But we're happy that they did. It's great. National Advocacy was terrific. I always choose that first. It is the most important conference to attend. I know that it was the same week as ICE, and I know that it was the same week as MCT with their user conference. I use Encompass. That's my LOS. I am an MCT customer. I'm a longtime supporter of MCT. I try to go to all three of those conferences, but for me, advocacy is the most important thing. It's my priority, sorry, no offense, Brian, but not tech.
Right.
And so when you got to choose, you choose what is top of the list. And I chose to be in Washington, D.C. to make sure that I was part of a grassroots effort to get our voices heard. The thing about advocacy is this: there's when all is said and done, there's a lot more said than done. And everybody can click on likes and say, yeah, it's terrible, but you got to do something. Like, it's terrific to say that things are bad or things should change or that you want it to be better. But if you don't do something and take some action, if all you do is watch and listen and maybe click a like once in a while, then nothing really changes. So you got to do stuff. And that's one of the things we really try to do is we try to take the issues that are real world, on the street level issues that actually impact IMBs, our members. Our issues come straight out of our membership. And we focus on the issues that are causing challenges for IMBs and their borrowers, because we kind of think those two things are indelibly linked.
So let's talk a little bit about CHLA. I have a feeling that some of our audience, maybe a lot of our audience, doesn't really know who you guys are and who you represent. You've already said you represent IMBs, independent mortgage bankers, but can you define for us a little bit, more about what your membership looks like?
Yeah, sure. And so CHLA is a trade association. It's a nonprofit organization that focuses on advocacy on behalf of small and mid-sized independent lenders. And we're growing. We've grown substantially over the last couple of years. People seem to be becoming more and more aware of advocacy as an idea and a theme, as well as looking for ways to get personally involved. Yeah. And that's one of the neat things about our organization, is that it's a way that individual people can, raise their hands and go do stuff. And when I say go do stuff, I mean, we go to the White House, we meet with the directors, we meet directly with the CFPB. I personally spoke with Director Chopra about trigger leads about a year ago. So this isn't kind of just an idea and a bunch of text messages. We actually, we get face to face with the decision makers and talk about how those decisions impact not just us, but our borrowers. And we've got one foot firmly planted in the consumer experience, because like I told you at the beginning, if I don't close a loan, I'm not making my mortgage. So right. I need my borrowers to be, supported, protected. I need their best interests to be managed. And so we advocate and we take action for IMBs, and we do it in a way that is for their borrowers as well, because we see those two things as kind of being indelibly intertwined.
Yeah, when I think of CHLA, one word really stands out, and it's community.
Yeah.
And so I can easily connect the dots between community and consumer, right? And yeah. I think what I love about your organization, what I always loved about the local lender, right, is the fact that they're in the community. They understand the needs of the community, the consumers they serve, that particular, all the nuances that happen in a particular market. These local lenders, local loan officers from these IMBs really represent, the community, and the way your association is able to take that community-based, experience and take it to DC and advocate not just for small businesses, but for the consumers they serve. I think that's a key difference from some of the other, lobbying efforts that may be out there.
Yeah, I think that's true. We see value in all of the trade associations. The ABA does great work. the trade that represents credit unions and community banks and the MBA, and NAMB, NAMBA, all of the trade associations do good work. And oftentimes those trade associations, their viewpoints are aligned, and every once in a while, something's more important to one than it is to another. So, but I think what's most important is that everybody is actually making their voices heard and taking some action, because if left to its own devices, if we as an industry don't make it known how we want our industry to be governed and regulated and managed, then somebody else will certainly decide it for us.
Right. I think this particular topic, right, this credit trigger lead issue, the Home Buyers Privacy Protection Act, it feels like from my seat, I'm not in the weeds like you are on this, but it feels like from my seat across the trade associations, there is some commonality. There's more in common than not on this particular issue as it relates to the impact to consumers. I did a series of LinkedIn surveys on this topic, and I started from the place of, okay, lenders, originators, what's your thought? What do you think? And by and large, it was pretty one-sided what their thoughts were on trigger leads. And then I went the next survey was really around the impact to consumers, and again, very, very one-sided.
Yeah.
And then finally, I teed up last week with the National Advocacy Conference. From a loan officer lender perspective, I asked, do you support, the Home Buyers Privacy Protection Act? And I think the last time I looked, it was like 96% yes and 4% no. People don't realize this on LinkedIn. If you're the survey host, you can see all the people that voted either way. I might have to think about exposing those 4% that said they're against the act.
Well,
so
it's been interesting to watch the evolution too. So, really, and I'll give you some credit. NAMB jumped on this early when the Torres bill came out. NAMB applauded it openly, aggressively. We applauded it too. And we thought Torres was good. We don't think it solves all the problems, but it's a step in the right direction. And then Rose designed a bill that the NBA was very supportive of and had a lot of involvement in drafting. And I know that there are there were some questions about some of the language in it. And then Reed came out on the Senate side and designed a bill that I think everybody kind of universally said, okay, we can all work with Reed. Reed works for kind of all of us. I saw the Reed bill before it was while it was in draft. We have pretty close relationships with the Senate Banking Committee, and so they made sure that we were looking at it and talking to Reed's office and giving them some feedback on it early on. So I think it's good. I don't know that legislation solves this problem, but I think it's good that we're all coalescing, that the entire industry is coalescing, and I think that's good for the industry because historically we see that this industry tends to be pretty fractioned, right?
Yeah.
And it doesn't need to be that way.
All right, so you put it out there. So let's go a layer deep. You said you don't think legislation necessarily is going to solve this problem.
We already have legislation.
let's
talk about what trigger leads are, because
let's do that.
You don't just scratch the itch on your skin and say make the itch stop. You find out why there is a itch in the first place. So trigger leads is industry jargon. That's what we call it, but that's not what they are. This is actually a result of the Fair Credit Reporting Act, and the Fair Credit Reporting Act expressly gives authority for these things to exist. This is nothing new. When I began to watch as more and more frustration grew over trigger leads beginning a couple of years ago. Look, Brian, I wrote my first loan 25 years ago. I've been taking loan applications for a long time, and I've been looking at trigger leads forever. This is nothing new. 20 years ago, my borrowers got a phone call after I pulled their credit. And we all thought that if we changed their phone number inside of our loan application, it wouldn't happen. And then we tried something else and we tried something else, but it was much smaller. It wasn't nearly what it is today.
Right.
But this is nothing new. This is old school. What's changed today is two things. One, technology has made it easier and easier than ever to amplify all those phone calls.
Right.
Two, there's a whole lot of people from the mortgage industry that don't have enough business, that don't have enough loans. And so it's like a, hungry swarm of something, locusts.
Yeah.
Landing on a borrower every time. So it's this unique thing that has happened, where the intersection of an increase in tech and a huge demand, has found this point in time and found the trigger lead issue. The real issue is the pre-screened offer of credit and the firm offer of credit, right? So the reason I mentioned legislation is because, and I wish we were talking about this more. What most people are frustrated by regarding the trigger lead experience is the violation of the existing regulations around them in the first place. So we already have laws that say how these things are supposed to happen. And that was one of the things we discussed with Director Chopra. And we talked about it with him, directly face to face, over Zoom. And we've talked about it with the directors of the FHFA and other federal agencies. So, Brian, right now, the way FCRA works is the FTC is responsible for FCRA. They manage it, they enforce it. And FCRA says that you can buy pre-screened data from the 3 credit reporting bureaus. But if you buy it and it meets your filters, your screening, that's why it's called pre-screened. If you buy it and it meets your screening, and if you contact the consumer, you must make the consumer a bona fide offer of credit.
Right.
Bona fide. Okay. So let that stand on its own for about 10 seconds. Now you tell me, when your phone blows up with 60 text messages and phone calls, how many of those are legitimate, bona fide offers of credit that you can walk right back into the bank with and say, yeah, I'll take that offer?
Right.
How many?
I'm gonna speculate that it's less than 10%. And that might be on the high side.
I would tend to agree with you.
I mean, how can it be when I timed this, right? I did a last November, I made application with a friend of mine who's a loan officer. I'm like, I just want to test this out and feel it for myself. And it was amazing how quickly my phone started blowing up, minutes, right?
Yeah.
Like less than 10 minutes.
Yeah.
Which leads me to, and you and I had this conversation in the hallway at a conference back in January. One of the bureaus has made this data and information available in what I'll call nearest real time.
Yeah.
Like seconds after it hits, an inquiry hits, the machine starts feeding these leads out to the network. And then you hit it on the head too. I think, the convergence of technology, whether it's the automated call platforms, the automated push to text platforms, all of that has made this become what it is, really, because these aren't typically individual loan officers that are making outreach off of these.
I can't imagine what you mean, Brian. You mean that a licensed person is not the one who's making the solicitation to offer a bona fide offer of credit? That seems like something the CFPB might have a little jurisdiction over.
I would think.
It also seems like something the state regulators in 50 different states and the state of Washington, D.C. might have jurisdiction over.
Yeah, I'm surprised we haven't heard from some of the state regulators that are maybe themselves have experienced the impact to themselves as a borrower, right?
Yeah. Well, so here's the deal. So before we even dive into a flat out universal federal legislation ban, the regulations already exist to solve this problem, right? So number one, state regulators and the CFPB have authority over their licensees, right? State regulators, both at the bank and at the non-bank level, federal regulators over licensed loan officers, and then over some of the federal depository banks at the CFPB. And not all. There are about 5,000 banks that the CFPB does not have regulatory immediate oversight over, but those 5,000, 4,997 or something, those almost 5,000 do have regulators at the FDIC and OCC and things like that. Right. And so there are regulators that can take action on this. By the way, it doesn't have to be simply at the federal and state level regulators. If you look at the GSEs can put into practice some requirements. I think they used to, they might still, around whether or not pre-screened and how pre-screened offers can be used in conjunction with a loan to be sold to the agency. Certainly HUD could do some things if they wanted to put some stuff in here. The enforcement of the existing laws. So one of the big problems with the pre-screened is this barrage of calls and text messages, right? Yeah. And we're seeing both. Well, I pulled credit for my borrower, I don't know, it was a couple of weeks ago. And I think I showed you my list, right? Yeah. So I started calling. So I had my borrower print screen every single phone call they got. And I started calling those phone numbers. And every single one of them was unlisted. Every single one of them had no outbound caller ID tied to it. Every single one of them went to a generic voicemail that did not identify who the caller was. And it was one of those kind of computer operated, hi, you've reached a number, leave a message. Right. Those are all violations. Those are violations of TCPA, the Telephone Communications Protection Act. Those are violations of CAN-SPAM. Those are, sorry, not CAN-SPAM, do not call. There are very specific rules in place already that govern whether or not you can robocall, how you can robocall, whether or not your phone is listed and identified back to the company that you work for, whether or not you include your NMLS number when you reach out to a customer or when they call you. So most of the things that we're upset about are already legislated and already regulated. They're simply not being enforced. Now, take it a step further. The thing that's really dangerous, the privacy piece, it's not whether or not the bureaus are selling your data to somebody else, which we know they are. FCRA expressly gives them authority to do that. The privacy issue is when somebody who bought that data is reselling it to somebody else. And we know that there is a very, very unofficial dark little market of resellers that are reselling these things. Yeah. And the bureaus are responsible for keeping track of what their buyers do with the data, right? So there are compliance issues in there. The bureaus have some authority to enforce what their customers are doing with this data. That's number one. Number two, I got off track a little bit here. I'm sorry. The data itself, when it gets resold to God knows who, information broker, I don't even know where this stuff's going, because we can't figure out who's making the phone calls and doing these generic solicitations. When that data goes out, oftentimes, to your point, the phone calls happen minutes after your legitimate licensed loan officer pulled your credit. Right. And so that phone call is often something like this. Hi, Brian. I'm from the lender. I need you to email your pay stubs and your W-2s and your tax returns to my email address, info@ scammymortgage something or other.com. And now you are a credit breach. Yeah. So the privacy issue really mostly for me is about consumer protection, because these are privacy breaches at the most fundamental level. And we have regulation to enforce this already. We have the ability to go after this stuff. The enforcement capability that is out there under FCRA, CAN-SPAM, TCPA, UDAP, not to mention LO licensing, SAFE
Yeah.
Act. It's all in place. Let's just stop this thing.
I love that you gave the example of the outreach that generically references the lender. So it's implied that the individual that you just applied with is now reaching out as a follow-up, right?
Yeah.
And it's I mean, there's definitely, I've seen the shadiest of shady, marketing, mostly the direct mail that you get as well, which feels like that's starting to slow down because it's coming days after the event, and now you got people that are attacking it minutes after the event. So we've got Sasha, who has asked a question around kind of an opt-in versus opt-out world for consumers. Today, we know we have optoutprescreen.com, which is a website that is managed by the four bureaus. Technically, Innovis is in there as well. I've spent a lot of time looking at that website, the information on the website, and more importantly,
I lost my vision doing that.
Yeah, the form that you need to sign up, you need to access as a consumer is kind of buried in the website, right?
Yeah.
And you and I have had quite a bit of conversation around how to potentially improve this, which hopefully we'll put our heads together on that at some point soon. But what are your thoughts on, from the consumer perspective, an opt-in versus an opt-out approach here?
So that's always been our leading position from day one, and continues to be our leading position. And we talked about that with the Senate Banking Committee. We talked about that with the House Republicans on the finance side, with the Democrats on the finance side. We're going to be talking about it with the White House in a few weeks. We talked about it with Director Chopra. We need to go talk about it with the FTC. This problem is very easy to solve. Number one, there's enough regulation in place. I think we just kind of proved that. Number two, the regulators just need to regulate and enforce. And number two, right now, today, to your point, it's an opt-out. In order to opt out, you have to navigate through a maze that was created by the very people that sell the data and owned and operated by the very people that sell the data. And after you navigate through that maze, then you got to wait, I don't know, a week, maybe longer, depending, for it actually to take effect, which makes it functionally not so great. No. Flip it from an opt-out to an opt-in. It's that simple. And that is so easy to do. Take that mortgage and make it an opt-in at the time you pull a mortgage credit report. Put it right there on the pulling of the mortgage credit report. Make a button. And then the loan officer literally says, do you want to have other options? Would you like to receive other options? Or do you want to remain automatically opted out by default? And they say, oh no, I want options. I want to see my other options. I want 8 million people to call me tomorrow or next week or in the next 15 seconds.
Right.
Click a button. When you transmit that credit report request, right, that button transmits at the same time. It immediately updates into the bureaus, and it immediately says whether that specific credit report pull can trigger a trigger lead. And that doesn't universally opt people out for the rest of their lives. It doesn't change how things are doing. This doesn't hurt the credit card companies or the auto lease companies or the banks, who are all going to think this is a terrible idea, by the way.
Right.
All it does is on that one single credit pull, it says this credit pull can't be triggered. Just that one. Yep. And that solves everybody's problem. And it doesn't hurt the credit card companies. You don't need legislation. The FTC can do a rulemaking and decide to flip it or add that little nuance. I'm sure that we've got plenty of tech people smart enough to figure out how to program it into the credit report ordering system. And then this problem goes away. And that's where advocacy, like all of us talking about stuff, turns into action. Let's figure out how to make actually, trying to get a bill through Congress. I mean, let's be honest. They can't even pass a budget. Right? Like the one thing they're supposed to do is to appropriate funds to run our government, and they won't do that.
Right.
So getting a bill done is a long road and a hard road. A rulemaking and then a little bit of enforcement with the existing resources that are in place right this second. That's what needs to happen.
So we've got our friend Andrew Bertman, who
Andrew's great.
This one is a rhetorical question, so we don't have to answer it, but we'll just put it up there. This is one of your examples, Taylor, of where at a state and local level there is some enforcement that can be done and should be done, and it's seemingly not being done.
Yeah. Oh, and listen, there's all kinds of other stuff that I didn't even mention. People are reselling this stuff. That's kind of, and there's a lot of states that require anybody brokering out any kind of lead to be licensed. So there's licensing enforcement in, I don't know, 30 or so states for that. You certainly could be reporting on, source of lead. These questions could be built into a lot of the examination process. CSBS is working on SES, which is a universal state level exam, and I'm going to talk. There's the potential to build this in as a component for one of those things. There's a lot of stuff that can be done. You don't just have to take a samurai sword and swing it and do kind of a broad stroke brush attack, because remember, we only live in our little mortgage industry. There's the credit card industry. There's the auto finance industry.
Personal loans, student loans.
This trigger lead thing is a thing everywhere. We're just getting this weird kind of impact from it right this second. But I really don't think Capital One or Jamie Dimon wants to be prohibited from sending out his credit card offers. It's, there's competing interests that need to be thought through and really considered.
Yeah, one of the I'm just going to keep putting some of the comments up here because they're interesting. This one's quite long from Sue. Thank you, Sue, for that. By the way, follow Sue Buswell, # Sue knows the score.
By the way, she's the first person I call when I need to understand something about FICO scores or Vantage scores or credit reports or anything credit related. She's like, she knows everything.
Yeah, she's amazing. She is amazing. Same. She's on my speed dial for sure. Anything credit related. She and I did a first-time homebuyer webinar for a credit union group back in December. And when I say she and I did this webinar, Sue carried it because her ability to take technical knowledge of all things credit and distill it down to where a prospective first-time homebuyer can understand it was simply amazing. So if you're out there and you're watching and you want to do something for consumers, first-time homebuyers related to credit, you need to have Sue on your list.
Yeah.
I had another comment that I want. Let's talk real quick before we wrap up around, enforcement. So you talked about firm offers of credit, right? That's the requirement.
Yeah.
How are originators who are not otherwise lenders themselves
making a firm offer of credit?
Making a firm offer of credit. What is going on there? Because I see a lot of that happening.
Well, so let's talk about that. Before we even get into that, originators, how are telemarketers that are making the outbound calls making a solicitation when they're not licensed? Number one. Number two, how are telemarketers who are not licensed making a firm offer of credit? That's a big question. Technically speaking, if you're calling somebody, you should be on the phone making that offer, saying you are pre-approved for and eligible to receive a loan for X amount at X%. That's a firm offer of credit. And you can have some stipulations in there that your FICO can't change and you have to do an appraisal. Like there could be some generic stipulations, kind of you can't turn out that you're an axe murderer and you're in prison right now, that kind of stuff.
Yeah.
But it has to be a bona fide firm offer of credit. If you're an unlicensed telemarketer, I don't know how you're making that firm offer of credit and not violating, state laws and the SAFE Act. So if you're doing it, it's a UDEP violation. Two, if you are not a lender, you can't make that firm offer of credit. You have to be able to actually make that loan. If you can't actually make that loan and you are representing that you can, then, I think that's UDEP, if I remember correctly. So there's a lot of nuance wrapped around this that kind of comes back down to the fact that it's supposed to be a firm offer of credit. It's not a firm offer of, I'll go find you somebody who will give you credit. It's not a firm offer of, I'll go represent you later if you it's actually here's a loan, I can give it to you, you're pre-approved, give me your paperwork. That's what it is. And if you can't do that and you're representing that you can, whether it's because you don't have the license or you don't have the right license or you're not in the right state, if you can't do that, but you're representing that you can, that's UDEP.
And that's all. I mean, those are examples of, we don't need legislation. We just need enforcement.
We don't need legislation. We need enforcement. If somebody starts to enforce a little bit, word will get out and everybody, all the bad actors will realize the jig is up and they will stop. And then we can go back to status quo, which is where we were 3 years ago, which worked just fine. Maybe 5 years ago.
Yeah, probably 5 years ago.
Yeah.
And I don't want to discount by saying, enforcement solves the issue, or at least starts to solve the issue. I don't want to discount or make it less important for the advocacy work that is getting done.
Yeah.
All these, because I think it all goes together, right? Clearly,
let's have a real honest conversation for a second. The great thing about advocacy and about promoting these bills is what it does is it gets your representatives in Congress thinking about it. Yeah. Because for what I've learned in the last couple of years since I've been really involved in policy, the senators and the congresspersons, they talk about bills, their staff do the work.
Right.
The cabinet and then the administration enforces it. If the senators and the congressmen are all talking about the problem, it's going to work its way over into the executive branch. The executive branch is the agencies that actually enforce this stuff. And if enough senators and congressmen say, hey, this is a problem, can you guys go please solve it? Then the agencies that have the enforcement authority and can actually do some stuff, they can take immediate action. And it really won't take that much. If we start to enforce the existing laws, word will spread quickly. And by the way, it's not that hard. I mean, just, let's ask the question, who are the leads getting sold to in the first place?
Right.
Do you have the license that you need to make a firm offer of credit?
Well, if you're watching this right now, whether it's live or a lot of people are going to see this later today and probably into the week as this LinkedIn algorithm kicks in, and you're a player in this space, meaning you're actively participating in the acquisition of this data and then, actioning on it, you better be looking at yourself first. You really better be looking at your own house, because I do think at some point, sooner than later, we are going to see, some action taken at the enforcement level. And to your point, Taylor, that's going to be, that'll be the most meaningful kind of strike in this thing.
Yeah. And it'll be retroactive, Brian. What'll happen is there'll be an exam, they'll go back a couple of years, and then it'll be painful. And that's, right. Nobody wants that either. I mean, the reality is, and, FCRA exists for a reason, and there are consumer protections in there for a reason. And there is a flip side to this thing, that if my consumer pulls credit and gets a letter that says, excuse me, that they're going to be given a new, mortgage with a 20% interest rate and 18 points, I kind of want to protect them from doing that by saying, no, you can have, 5% and 0 points.
Right.
So, and that was the original intent of this, was as a consumer protection to make sure that consumers have choice and aren't blindsided, and that they know. And we can continue to do that, because at the end of the day, it's about taking care of our borrowers, making sure that they have the best option, making sure that they have the best information, making sure that they are, that we advocate for them. And, I think that, and again, advocacy is super important. Getting this in front of everybody is super important. I hope this bill passes. But I don't think whether or not the bill passes should be the determinant of whether or not we manage the problem.
Right.
Because the problem, we can manage it right this second.
Taylor, always enjoyable. I'm always learning from you. I appreciate you joining me this morning on this super important topic. How can people best reach out to you and CHLA?
Oh, great question. So I'm a volunteer. I'm the president. You know, I do loans for a living. I would tell you, Scott Olson is our executive director, and he is kind of the face of the organization, and he does a fantastic job. LinkedIn is the way to go. Hop on our LinkedIn, follow our page, hit me up in LinkedIn, hit up Scott in LinkedIn. That's the best way.
Awesome. Thank you so much, Taylor. Look forward to watching this thing unfold and having many more conversations with you on this topic.
Thank you. Thank you, Brian. I appreciate you having me. It's always fun.
Thanks, everybody, for joining here today. Come back next week. We're going to wrap up this 3-week series with another perspective on credit triggers. See y'all.
Thank you.